Joining us right now is longtime Tesla bull Ron Barron. He is Barron Capital's chairman and CEO. He's been, again, a longtime investor, not just in Tesla, but in many other Elon Musk companies. And Ron, thanks for coming in today.
Thanks for inviting me.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything. Yeah. I think they might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents, if you're running for election. But you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. Those are the things that we look at.
So you're on a buying spree right now?
I didn't say I was in a buying spree. I just said I can't believe how cheap things. I own a lot of things. I'm a long-term investor. You know, it's interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. Mm-hmm. And you were asking him, great shirts he has all the time, I guess. But you were asking him about, what he thought about Tesla. And he said, well, for a 4-week horizon?
Yeah.
A 4-week horizon. So that was his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Yeah, but I mean, he was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on. At $1.1 billion, that's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robotaxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything. But then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a year from now to the fundamentals of the business? Meaning, are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the Robotaxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though, first of all, that we're investors in people for the long term. Question everything. Don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years. Own it. We own things. We don't buy and sell things. As far as the fundamentals go, so I want to make sure we talk about other people, too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
A major guy. So his business. And you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use over without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that this was a really interesting time to buy because the the software was working way more. When they have cars, you have to have $150,000, $200,000 car. Our car is $35,000 car, and it's software. It's software and cameras, and so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one. So fundamentals, the changes, is that so historically what we did is what Tesla did is they built a facility in China. They bought this junky place that was bankrupted by Toyota and General Motors in California, and all the union workers were fired. Hear that, Joe Biden? All the union workers were fired. And then every single one lost their jobs. And then we take over this plant, and they go look at it for the first time after he buys this thing for a distressed price. They spent $1 billion on it. It cost us $20 or $30 million to buy it. And then they go to see it, and Elon says, yeah, let's go look at this place we bought. And it's a huge facility, 5 million square feet. And they can't get into it. They finally get inside, and they go with one of his friends from college who's a director, and they open the door, and they look inside, and it's dark and dismal, and it's drugs and prostitution and it's crazy stuff inside of that place. And they look around, and it's incredibly dark, and Elon's looking around, and he says, well, what we're going to do is we take off the roof here, we're going to make it all white, and we have the production line running there. And so they learn how to build it. And it was making 400,000 or 500,000 cars a year, 600,000 cars. Then they go out and they build a facility in Shanghai. And it cost them $7 billion to build it for 1 million cars. And that factory was making $15,000 in profit a car, investing $7 billion, making $15 billion a year. And then price cut after price cut after price cut. Chinese are incredible competitors. I don't understand how American car companies will survive, except for Tesla. And so I'm going too long.
But
no.
Ron, let me just ask
but anyway,
you.
the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you're going to robo cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1,000,008 cars. Now all of a sudden you're keeping the cars and making them robotaxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles, will generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year for 1 million cars.
You have been a longtime believer in Tesla, a longtime believer in Elon Musk, and you've been right. The numbers that you've kind of come on here and talked about, we've headed $1 trillion and over. The market cap is now back at $715 billion, but market cap was above $1 trillion. You had said $2 trillion when people thought it was crazy. It doesn't look so crazy anymore. A lot of the things you said have all happened, and it's because you've been a believer in Elon Musk. I would add that there's a third consideration in the stock market right now, though, too, and that's that Elon Musk has gotten so associated with Donald Trump and with Republicans and with Make America Great Again that it has led to blowback in some areas. In Europe, sales are down 45% in some areas. There have been cases of vandalism, even terrorism, against the cyber trucks, against Tesla cars, against some of the factories that are out there. That's a pushback. And I think of Warren Buffett, who used to say that just because he is the CEO, that doesn't mean he has to check his political beliefs at the door. That's what he always said, and he was always pretty outspoken on things. But several years ago, many years ago, he changed his mind on that and said he was going to keep his political beliefs a little more to himself because he didn't want the impact of people who disagreed with him to come back on Berkshire. Do you think that this is helpful to the stock with what he's doing right now? Do you think does it concern you that he's spending more time at Doge than he is at Tesla?
So my advice has always been to avoid politics. I don't like talking to you guys about politics. I don't think corporate executives, I don't think that's the best use. But he believes this is really important for our country. So remember, ChatGPT, that was founded by him. Yeah. And he put up the money for it in a non-profit organization. That's worth $350 billion. He walked away from that because he wasn't convinced, in fact, he was convinced the opposite, that this was going to be bad for humanity. He was worried about humanity, so he gave up his interest in ChatGPT, although they offered it to him again, but he does not care for the person who's running it, Sam Altman. Yeah. Doesn't trust him. So basically, I don't think it's a great thing to alienate half the population. On the other hand, he believes that digitization and autonomy is going to be driving the future, and he thinks we're on the verge of having an era of incredible abundance. So he's setting it up for that. And then in addition to that, what he believes is that in order for the planet Earth to survive, that America has to be militarily strong. And the only way you can be militarily strong is you can't be financially weak. So what he's trying to do is set it up so that you'll be financially strong, and then you can be militarily strong, and that's going to protect the planet, he believes. And I agree with that. So I think there's, I would hope that he would be a little less visible, but he feels that this is the way he's going to get things done, and he's been uncovering unbelievable things, and I think will be successful.
How often should you expect SpaceX to have these issues? And you see the celebration from the Elon haters when it's sick, but they actually chortle and sort of laugh about the two recent incidents. Elon, he's right. Rockets are hard, but this is all. There was a time in Elon's life where he would have, if a launch had failed, he would have been bankrupt. I think he's recounted that story before.
3 different times.
Yeah. So this happens.
Sleeping on the floors.
Are things going along fine with SpaceX?
I ask about that regularly. I ask about succession. I ask about how the management is going and whether he's showing up. And he is showing up. I mean, unbelievable that he's doing all the things he has in Washington. And I was talking with someone who is a financial executive of SpaceX, I guess last week. And she was telling me that when there's an issue with something like Starship, which isn't working yet, but making incredible progress, there might be 3 meetings a week. He's in every one of the meetings. And then when it's Falcon, that's going great, so he's there for a short time. And if it's Starlink or Star, for the defending of our country, he's there for those meetings too. But he's there all the time. I said, so you're a financial person. What are you doing there? And so she says, well, what we do is we give him a deck, and he goes through the deck, presumably, but maybe he doesn't, because maybe he knows all this stuff already. And we ask questions. So why are you in this meeting? You're a financial person. Well, I'm there because we give him the options. This is what this is going to be. This is one solution. And she says, I'm the one who figures out how much everything's going to cost. He shows up at all these meetings, and everyone tells me the same thing. He is more charged up about his business now than he's ever been. And there are all these when you talk about the fundamentals, there are all these new products that are coming out right now. Right now, in the middle of the year, you're going to start seeing new products, new refreshes. When you talk about Europe sales being down 40 or 50%, that's they don't have any cars. They're not making them. They're not making them because they're going from the Model Y, which is the best-selling car on the planet, 1.2 million cars a year, to not making them. And so how are you going to have up sales when the car that's driving your business isn't being made? And so that's what's happening, and you're starting to make them now in the refresh model. And as you see pictures of people saying, man, this is a great, incredible car. And then in addition to that, you talk about full self-driving. Man, you won't believe what this is like. I mean, you have to. So Joe, you like Porsches or something? Go get one of these cars. Get it. I'll get you a test drive. I will have a
Taycan?
I will. Does that you have Taycan?
No, I do not.
Okay, I will have a car brought to your house.
You want me to get an EV?
I want you to.
What, an X? You want an X, like a Plaid?
You like the X? We get the Plaid. Get the Plaid, S. And
I do like those. I want a black one if you're offering.
I'm not offering it to you, but I will have you get a test ride. And the way they get the most sales is they get people who have test rides. It's really funny. I had a battery in my Kia that wore out, and so we're in Florida. I have one in Florida, and so Judy says, "Well, you got to change it." I said, "I'm not going to change it. Why don't we have someone else do that for me?" No, we're going to change it. So we call up in West Palm Beach.
I do that. Yeah.
We call up in West Palm Beach, drive over there, and then as we go in, there's 2 young men sitting behind computers, and one of them says, "Ron Barron." "You're Ron Barron? Wow. Can I have a selfie with you?" I said, "Oh, sure." And then he does that, and then the person next to him says, "You're Ron Barron? Wow, I got to call my manager." And the manager comes over and he says, "Ron, you changed my life. You changed my life." "Why?" I said, "Well, because I talked to you 7 years ago, and you convinced me that this was a great place that I should be working. And in fact, most people who are in my business, what they do is that their goal in life is to make as much money as they can, as fast as they can, so they don't have to do it anymore and they can do something else. That's what they want to do. They make as much money as they can, as quickly as they can. And what our goal has been is to change people's lives, change the people's lives of people who work with us, and change our clients' lives. Changing lives, that's our mission.
Can I ask you a different question? About a month ago, you were at least named a backer of Elon's bid to buy OpenAI. And I'm curious, in the context of that bid, what work you did to try to create the valuation of OpenAI, how you came to $97 billion. How did that come about?
It was a small personal investment. We hadn't done enough work to really do investment on behalf of our clients. The idea behind it is that this is from a charity. So charities have to get the highest price for their interests if they're going to sell them.
Right.
And this is a bid for control of this company from the charity that owned it, that controls it. And the idea is that we think that there's most likely be interesting discovery if you go behind the wall and look at to see if there are to see conflicts.
Right.
And there's state attorneys generals that are involved, and look at this right now, a number of them, because they're charged with making sure that charities get the highest price, the best value for it. I can't deal with my charity, with my foundation. I can't deal directly any way, shape, or form. Neither can people who are running this company deal with a charitable organization. They are charged with being fiduciaries for the charity. So I think that when it comes out, that'll be fine. Or we think already that Grok, which is owned by us, is going to be very shortly better than ChatGPT. And ChatGPT right now is being valued for $350 billion. While ours is valued, Grok is valued for $50 billion.
Can I ask a question about the bid for OpenAI? I mean, the critique of that bid was that it wasn't a bona fide bid, that it was an effort to create discovery or to help in the context of the lawsuit against OpenAI. And then what I understand was the bid was withdrawn because there was a view that it actually was going to undermine the case, given what the judge said.
I haven't followed. I have $5 million invested.
Okay.
I haven't followed it that closely. I was interested when they described it to me initially. I thought that that it wasn't right what was being done.
Right.
And I thought that he started it, as I said in the first place. So here's someone who's being accused of profiteering, and he started this for humanity, right? And so it's not a huge study that I've done on this, but I thought it was interesting the way that it was described to me, and I think that it was a common.
But it wasn't Barron Capital then?
No, not Barron Capital.
It was Ron Barron.
Ron Barron.
Okay.
Maybe it was Barron Capital.
I think it was Barron Capital.
Yeah, maybe it was Barron Capital. Yes, it was.
Okay, so
Thank you.
No. So it would have been the shareholders of Barron Capital. I mean, it would have been
My family.
Oh, not the people who invested in Barron Capital, the firm.
No, they invest in mutual funds. My family owns Barron Capital.
Understood.
Ron, very quickly, you did sell more shares of Tesla in the second quarter last year, 1.7 million shares roughly, 1.8 maybe. That's the second time I recall of you selling shares. I remember you joined us back in 2021, in March of 2021, after you had sold about a similar percentage. At the time, you said it wasn't that you didn't love Tesla, but it was getting to be too big of a position in your funds. Was this the same story in the second quarter?
Same story in the second quarter, and we sold maybe 5% more last month. Okay. So I think we probably have somewhere around 2/3 of the stock that we bought in 2014 to 16, and so everyone, I didn't sell any personally, and so everyone, has to deal with certain clientele, and I deal with the critiques of my clientele for how large the positions are, and if they get very large. I mean, right now, Tesla represents.
It's about 30% in one of the funds.
Well, I think it's around, in Barron Partners Fund, it's about 12% of the firm assets, and SpaceX is about 9%. So about 20% of our assets. So structure portfolios. that the interesting, so QQQ, Bloomberg, says that there's only two mutual funds in the United States that have beaten QQQ. It's 2,600 in the last 15 years. Barron Partners Fund is number one. Philadelphia Growth Fund is number two, and other 2,600, no one else has come close. And so so I have shareholders in our mutual funds, and when a position gets real large, like Tesla has become, our cost is $11 or $12 a share, then they say, well, how can you have such a large position? And I made an exception after we bought as many shares as we did for clients between 14 and 16, and no one else wanted to buy stock, that I went to the board of our funds. I said I wouldn't buy any more stock, but I have to buy this stock. I'm not taking any corporate opportunity. All of the other funds I have already invested, but my deal with you, if you let me do it, and I said I wouldn't, but if you let me do it, then what I'll do is just make Barron Capital financially stronger. I'm buying it for them, not for me. And in addition to that, I'm the last in, I'll be the last out. So I won't sell a single share personally until I sell all the shares for clients. And that's what I've done. So even though we've sold maybe a third of our stock for clients, I have not sold a single share personally.
Ron, do you think the bloom is off the rose at all for the EV transition, or at least for the mandates by whether it's states or the federal government to hasten the transition? And does that matter with Tesla, since there's so many other things?
Once you get to scale, nobody can compete. The Chinese feel that there's only one competitor.
Everyone's going to want electric cars.
Yes, everyone.
Okay.
And except if you're going to be a car collector, like if I collected the car that I had in high school and kept it, that would be.
That was a Model T.
No, it wasn't. It was a Triumph.
It was a joke, because that would have been 1964.
Right.
That would have been like 19.
But it was a red. So I was a lifeguard. I hurt myself, and so I got disability for $600. And I took the $600, and my father took me to some place in New Jersey, and I bought a used red Triumph.
You were a lifeguard too. Did you know this corn pop fellow?
Who?
No, go ahead.
No.
That's a Biden joke.
I was a lifeguard in the daytime, and then I worked in the emergency room. I worked 9 to 5 as a lifeguard, and 11 to 7 in the emergency room in a Red Bank hospital.
Let me ask you
as an orderly. That was an awful job. I wrapped bodies.
You saved nine people too?
I never saved a person.
That's
not one.
That's typical. Yeah, except for Joe, saved 9.
Ron, let me ask you, what else you're buying right now? What do you like? What do you see in the broader market?
So I'm not allowed to say what I'm buying because it's interquarter. But I would point out that there's so many companies that we've invested in whose stock prices haven't performed over the past year. It's remarkable. So if you look at Buffett's record, 1/3 of the years, of 50 or 60 years, 1/3 of those years, he underperformed the S&P. 1/3 of the time. How come? But he's massively outperformed over the long term. How come? He's not trying to be the market. He's just trying to invest in special companies. The market could go up or down, but he's basing his performance on how well the businesses do. That's the same for us. So for us, 97% beat the markets at top 20% and 57% top 5% in Barron Partners Fund. And so the way I think about the investment structure of a portfolio is that you make the most money in the riskiest part of your portfolio. And that might be, the SpaceXs and the Teslas. That might be 20 or 25 or 30% of the portfolio. Then 50 or 60% of the portfolio is invested in companies that are relative to book value, relative to cash flow, relative to EBITDA, whatever. And there could be financial companies, they could be real estate companies, they can be healthcare companies, they can be industrial companies. So that's the bulk. Double-digit growth, and then maybe 15, 20% of your investment, of our investment, are invested in companies that are hurting their current earnings. Stocks go up and down, as you see every day. They beat, they lose, they miss. The stocks go up and down. And what we do is we're investing in companies that all the time are expending their money, spending their profits, so they could become larger in the future. I was talking to our firm the other day, and I was saying that it's like when you're building a hotel. When the hotel is being built, you're not making any money when it's being built, but everybody wants to buy the hotel when it opens. And so basically what we're doing is we're buying the hotel while it's being built because of the fundamental research we're doing on the businesses. And the idea behind it is that we are able to do that, and people trust us to do that because our long-term record's so strong. They say, oh, I see, they've done it before like this. This is why they've invested in these companies where they haven't made any money for 2 or 3 years, because something's happening in those businesses that's going to make them go up a lot. For example, in Vail. So Vail has, I don't know, 41 resorts. And in Australia, and now they're looking in different places. Now they're going to Europe. People in Europe, the business is 3 times as big as it is in the United States. 3 times as big. In the United States, you buy a resort, you own the resort. You go to Europe, one guy owns the ski lifts, one guy owns the glaciers, one guy's the restaurants, one guy's the ski patrol, and one guy's the base village. So what we're doing in Vail is that we're going there and telling them, look, we have these ski passes that'll bring more people to you. And in addition to that, we'll be able to get investors to spend $1 billion on building a base village. This is just starting. So people would say, gee, how could you invest in something that's not going to pay off for many years? That's what the Vail is. You look at Hyatt. So I've been an investor in Hyatt Corporation since, in the Pritzker family, since the 1970s, when Jay was the first important executive to help me in business. And in Hyatt, so handshake guy, whatever he says, anything he says, good or bad for him when the deal closes, that's his word. That's what he does. And so he goes public, goes private, and then goes public at $35 or $40 a share with Goldman Sachs, I don't know, 10 years ago, 5 years ago, 8 years ago. And we're one of the largest investors on that purchase. The stock, then there were 190 million shares outstanding. He was basically going public so his family, and Tom's family could sell stock. And he was buying it. And basically, there were 180 or 190 million shares outstanding when he went public. And he now has less than 100 million shares outstanding.
Right.
180, 190, and the stock has gone from 35 to 130. Well, actually 150 recently. Now it's 130. Compared to all the other hotel companies, it's unbelievably cheap. MSCI, which I wrote about in his quarterly report, Henry Fernandez has been here a number of times. He has arguably the most, he was just in the Middle East. I was writing about this in my quarterly letter. And he is arguably the most important person, company, determining financial markets worldwide. You want to be a public market that attracts other investors, you have to follow his rules. He makes the rules. And so basically, the people, Arch Capital, how did we go from $2 or $3 in an insurance company in 2001 to $100 a share, 30 times their money? In MSCI, Henry Fernandez, $18 to 30 to 18 to 600, and so it's about betting on these people that build these businesses. So across the board, I look at our portfolio, and if we don't have a positive flow and have a negative flow, and I have to sell something, I can't tell you how it rips out my heart. But we've gone from $100 million managing in 1992 to $45 billion in December, and we made our clients ourselves $49 billion in profits. So $45 billion of profits, realized and unrealized, and $49 billion of profits and $45 billion of AUM. Made more profits than we have AUM.
We always appreciate you coming in, Ron. Thank you very much
Great
for being here. Yeah.
Thank you.
I'm sorry I didn't give you enough chance to ask more questions. I will next time.
Thank you very much. We appreciate it, Ron.